Hey traders, in this lesson I want to show you guys how to create a regime filter in Pine Script. So the concept of a regime filter is that you get a key moving average from a key index. So in this case I have Alphabet Inc. or Google, the Google stock loaded onto my chart from the NASDAQ exchange. And down here, this colored indicator you see is telling me whenever the 20-period daily chart EMA is above or below price action. So when the NASDAQ index is trading below its 20-day moving average, this turns red. And basically what this means is if you're trading any stock within the universe of the NASDAQ index, perhaps it's a time to be cautious because the index is not looking healthy right now. So maybe if you are a long-only trader, you want to stand aside when this turns red. Or if you're a short trader, you like trading stocks to the short side, waiting for this to turn red could be a good indication that perhaps there is a pullback imminent in the market. This is a popular trading filter for investors particularly, but it can be used for traders and day traders as well. But for today's lesson, I'm going to stick to the higher time frames and treat this as something of a investment filter. This is something I use and employ in my own investment strategies in some of them, especially in the stock market. And I'm excited to show you guys how to code this in Pine. So let's get started. So here I am with almost a blank script. All I've done is add some user inputs here to save time. We're only getting 3 inputs here. We're getting a time frame to base our regime filter on. We're getting a moving average length, 20 by default. And the time frame is daily by default, and then a market or symbol. In this case, we're just loading the NASDAQ index by default. And to do this, I use the time frame input, the integer input, and the symbol input. If you're not familiar with these, make sure to go back and watch the user input lesson earlier in the course material, because now I'm just going to move on and start building out our regime filter. So the first thing I do in this particular script is I actually create a custom function, a custom security function, just to save a little bit of time and make our code a little more readable. And my function looks something like this. I start it with an F underscore so that we know it's a function. And then I just call this one F underscore SEC, which is short for security. And this is going to be a abbreviation of the security function, which will make it a little bit faster and easier and more readable when we reference our security function in this particular script. So this custom function is going to take 3 parameters: a market, a time frame resolution, and an expression. So I need to define the function using our operator here, the equals right arrow. And then this function is going to pass these 3 values into our request.security function. And we need to pass in our market first, and then our time frame, and then our expression. But for our expression, I'm also going to pass in our anti-repainting code, the code that stops our script from repainting on the current bar, on the current real-time bar, and that is our bar state.isRealtime $1, otherwise 0. So this expression will reference the previous bar, the previous higher time frame bar. So in this case, if we were to use this function to reference the daily chart on this index, and the current bar happened to be a real-time bar that was actively moving, then we would reference yesterday's NASDAQ closing price, or whatever expression we put in here. Otherwise, if it is not a real-time bar and it is a historical bar, then we just reference the current expression or closing price, indicator value, whatever, on that historical bar. And this stops repainting. This stops the script from updating our expression on the current real-time bar. We always want to reference yesterday's price action on a real-time bar because whatever expression we are passing in has not been confirmed until today's bar closes. Obviously, there are exceptions to this. Sometimes you do want to reference the current day's high or low or close. But for this script, we do not want that. So that's what this code does. Moving on, we need to get our EMA value. To do that, I just create a new variable called EMA, and I'll set this to ta.ema with a default source of the closing price and our length input as our period length for this moving average. And then next up, we need to get our EMA value from the higher time frame. To do that, I use my custom function here, the f_sec, open up my parentheses, and then I need to pass in the current market or the market setting that we have and the time frame, so RES, and then an expression. So in this case, we need to pass in our EMA value. And now because I've already included this historical operation here, this ternary condition that checks if we are dealing with a real-time bar or a historical bar, I don't need to do that here. I can just pass in the EMA value. That's why I created this custom function. It makes our code a little bit tidier. And now the next thing we need to do is check if price is above or below our EMA filter on the market that we are referencing as our regime filter. So the first thing I need to do is get the current market price. For that, we are going to use the f_sec function. Again, pass in our market, our resolution, but this time we want to pass in the closing price. So this will get the closing price of the given market on the given time frame. Then we need to create a new Boolean value here or variable called filter. And this will be set to, is the market price greater than our EMA value? So is the closing price on our given market, on our given time frame, trading above our EMA value for that same market and time frame? If that's true, then our regime filter will be set to true. And now the final thing that is left to do is to change the background color of our chart based on our regime filter. So if price is above our given moving average, we want the background to be green. Otherwise, we want it to be red. So let me change our plot to a BG color function. Then we simply need to check, is regime filter true? If so, set the background color of our chart to green. Otherwise, if our regime filter is not true, then we want to set it to red. Now, when I save my script, we should be getting the colors changing on the background of our indicator based on whether the current index filter is met. So if I go over to NASDAQ NDX and open that up, here is our NASDAQ index. If I throw on an EMA and set it to our 20 period, you can see that the filter changes color based on whether price is trading below this moving average or above this moving average. And this applies to any market we load. So if we load Google, it's not checking if Google's price is above the 20 period moving average. It's checking if the index, the overall index, is above its average. So this can be a great indication of impending trouble. So you can see here that our indicator went red right on this bar here. And soon after this happened, price consolidated for a while. And then we started to get green printing back on. So the index started to look a little bit more healthy on this bar right here. So that could be a key sign to start paying attention for a potential breakout of this consolidation. Then we get more green here. You could start accumulating a position here, expecting Google, which is a major player in the NASDAQ, obviously. You could use this filter to inform your investment decisions. You could start accumulating here so long as this stays green most of the time. And then eventually we start to get the breakout. So if you're aggressive, you could start buying in here as the indicator starts turning green and price is holding the lows. Or you could simply wait for the breakout, which happens right here on this gap up. Our filter, regime filter, is nice and green, meaning the NASDAQ is looking healthy overall. Google has broken out of this consolidation. You can start buying on this day here in anticipation of a nice run in price action. And our regime stays green all the way up until this bar right here. So notice that price action is still trading above its 20 period moving average on this market. So Google is looking good. But suddenly the NASDAQ, the overall health of the market, turns a little bit sour. This could be a great position to trail your stop loss up nice and tight just in case the market does roll over, or you can start scaling out of your position however you like to invest or trade. And then you can see that soon after this turns red, we enter a pullback period, and then we get another green regime change here on this gap up above the moving average on this time frame. And then a couple of days later, we get signs of health coming back into the market. If you wanted to, you could buy a breakout of this high if the regime filter stays green, which it does. Here we get the breakout, the close above this previous high. and then our filter's green and it stays green for quite some time. Now, of course, you are going to get the occasional false signal. There are ways to improve this filter. For example, just because one bar closes below the moving average doesn't mean that the market has turned sour. It could simply be testing the moving average. So one way you could improve this filter and get rid of some of these false signals is you could open up the source code here. We could say here, is the current market price trading above its 20-period moving average? Or was the market price on the previous bar trading above its key moving average? Now when I save my code, these false signals should go away. There we go. We have a little bit of a cleaner filter here. So now the color will only turn red if we've had more than one bar. So we've had 2 or more bars close below the moving average on our regime filter market. And that is pretty much it for this script and this lesson. Just before we go, I'll quickly show you how you could apply this to crypto. So let's jump over to one of my favorite projects, Cardano. Open this up and change our market, wrong indicator, this one, change our market to Bitcoin index, which is, I believe, BLX, yeah, Bitcoin Liquid Index. And let's change the time frame to the 20-week moving average. That's a filter I like to use in my own trading. And click OK. If I zoom out a bit, you can see that during this entire period, Bitcoin was trading above its 20-period weekly moving average. And the market was healthy pretty much through this whole period. It was a little bit slow through here, but this was just an accumulation phase. And then eventually we turned red right here. Now it is obviously a little bit late. It's a little bit of a lagging signal. But the point of this is you'll never know when the top is going to come in the markets. So maybe you scale out as price starts to get a bit exponential. You sell some of your position up here. And then after the crash, we go red. You don't buy any more of your favorite cryptocurrency until Bitcoin starts trading above its 20-week moving average again. So you can see here that Cardano got back above its own 20-day period moving average. But when we zoom in here a bit, Bitcoin didn't start looking healthy until right here. And so if you didn't start buying Cardano until around here, sure, you missed out on the bottom down here. But if you started buying aggressively once Bitcoin started to look healthy, you could have caught this immense rally here from $1.30 up to around $3, just using a simple regime filter. And then there were signs of trouble coming in around here when Bitcoin started to struggle to trade above its 20-week period moving average. And of course, you could play around with this. You could change this to the 20-day period moving average, and it might be a little bit more responsive, a little bit more accurate and quick to pick up changes in the market. You could change the period. Let's try a 10-period moving average. A 10-period moving average would have gotten you in a lot lower in this particular rally. Let's have a look at a different market. Let's have a look at Ethereum. See how this would have affected Ethereum. Change this back to 20 and this back to the 20-week. And here you can see a similar story all throughout 2020. The regime was green and price just kept rallying. Then when we had a bit of trouble in here, if you waited until the filter changed, you could have safely bought Ethereum right before this nice rally. Same with around here, we started to have some trouble and then the regime filter turned green and then we had a nice rally from there. Now, regime filters are a great way to stay out of trouble when price is struggling and you don't know what's going to happen. Maybe it'll go lower, maybe it won't. But you don't want to be buying when there's a chance that the whole market could tank any moment. Whereas when our regime filter turns green, it's kind of like a traffic light. It means the market overall is healthy and it's a good time to be trading to the long side. And that is the purpose of a regime filter. And this is how you create one. I'll leave the source code below for you to play around with, and I'll speak with you in the next lesson.